Hey people, this is Rainer here and welcome to my weekly market analysis. It's definitely good to be back and to share with you trend trading setups and ideas for the coming week. For this week's market analysis, I'd like to share with you something which is, I would say, pretty important in terms of trading, right? Because most of the time traders usually trade what they think and not what they see. So in this video, I'd like to share with you something which I call trade what you see and not what you think. So for example, if the dollar yen is, as you know, has been reaching new highs week after week, and traders be thinking, it's overbought and I've been looking to short. But why would you be looking to short when price is making new highs each and every week? You should trade what you see. So on a chart, you probably see that prices is making higher highs. So look to get long instead of anticipating that price will reverse because it's now too overbought. So with that, I'd like to share with you a chart of a euro dollar, right? The euro dollar chart, which, as you know, I've been bearish since I would say a month back or so, and let me walk you through why I was bearish on it and my thought process on how I derived with that I would say that bias. So this is a chart of the euro dollar weekly chart, and you can see there's an upward trend line, and I've plotted three levels: the 135, 133, and 1275. So let me walk you through. So at this point of time, when price was trading at this 135 level, I wasn't bearish yet. Instead, I was still bullish and looking for setups to get long. But what happened next was that we had the close below the trend line, as well as the support level at 135, which is shown by this candle over here. Alright, so at this point of time, I was telling myself, since the support level and the trend line is broken, the trend could be weakening, but I would not be looking to short just yet. But neither will I be looking to long. So the next level, the key level I'll be looking at is that the 133. I was telling myself, if the 133 fails to hold, right, if price closes below the 133, and only then I will look to get short on the euro dollar, and only then will I be bearish on the euro dollar. So when this weekly candle closed below the 133 level that I have identified, my bias was switched from neutral to bearish. So let's look what happened when price did a weekly close below the 133 level. So on the weekly chart, we can see price closing below the 133 level. So let's look at a 4-hour chart and see what I did and what happened next. So on a 4-hour chart, right, I'll plot here, right, if you recall, the 132.20 level was a level I call out to short because, for a simple reason, because price broke through this level, tested once, traded lower, and came back. I anticipated a retest before price made another move downwards, and I did mention it, and I was looking to sell that level. So if you can actually check it down here, you see I mentioned that short 133.20 with a stop loss of 132.55. So that's what happened, and I got the short around here with a stop loss of about 35 pips. And let's look what happened next. So what happened next is that this move down here. So what is this move? I'm sure most of you have recalled is that the ECB cut the interest rates. So did I know that the ECB was going to cut the interest rates? No, I don't. I simply traded what I see and not what I think. Because when price made a new structure low, or when it breaks a key structure, I was looking to sell. And what happened when news came out is that it simply amplified the trend that's going in my direction. So again, once the news broke out, you can see price broke down of about 200 pips, and I didn't see that coming, and I just simply traded what I see. So again, there was no reason to take profits just yet because it's price making lower highs and lower lows. So here again, price traded lower. And again, if you recall last week, I said this high was a level to watch for, because if price could simply retest the level and traded lower. So again, what we got this week was that price indeed came back towards this level over here, where you can see here, traded the level down. Another opportunity for me to get short again to ride the move down. So basically I scaled in, and you can see that right now price is just traded near the low. So basically, let me recap, is that from the weekly chart, I had my bias on the euro dollar, and I screened down to the 4-hour charts for setups to get short on the euro dollar following my bias. I wasn't thinking too much. I simply traded what I see. Alright, my mindset wasn't, example, like, the euro dollar has sold off so much, it's oversold right now, so I'm looking to long. No, simply when I told myself if price broke the key structure at 133, I'll be looking to short. So right now on this trade, I would say for this, the first trade, I'm up about 35 pips stop loss. Price now is doing 380 pips, about 1 to 11 risk reward on the first trade. On the second trade down here, I'm up about, I would say, 1 to 1.5, 1 to 2 risk reward. So this trade alone is enough to cover up for the next, I would say, 12 to 13 potential losses that could come my way should it happen. So this is the beauty of trend trading. Simply write the move down and trade what you see and not what you think. Okay, so that's all I have for the euro dollar, and I hope you guys managed to learn something from this entire episode of the euro dollar. So without further ado, let me share with you some charts that I'll be looking at this coming week. So this is the chart of the dollar yen. Again, right, look at this bullish move. This is a weekly chart. Again, we have a very beautiful uptrend. Right, series of higher lows here, here, and here. Price broke out of this resistance over here. So please do not have the mindset that, oh, price is overbought, right? It's overbought and price should retrace. No, your thinking should be, price is so bullish, it's making new highs every single week. Where should I get long? That should be your mindset, all right? So where should we get long, or where am I looking to get long? So let's look at it. So looking at the daily charts, you can see this strong parabolic move, right? Strong momentum towards the upside. No reason to be shorting at all. I say no reason to be shorting at all right? So on the daily charts, strong bullish momentum. So now let's look at the forward chart, right? And you can identify trading setups down here. So I like to plot in my moving average, the 50, as well as the 20, because to me that's a dynamic support which price tends to respect over time. You can notice that, I scroll back a little and price tested once down here, bounced off, another time down here, bounced off, another here, bounced off, right? So one possible setup is to wait for price to retrace back towards this zone, right? This area, this entire zone that I've highlighted, to get long. Or another possibility is that, to trade the breakout. So should price just retrace a little bit, but not reaching our zone, you can have trade a breakout when price take out this new high over here, right? Looking at the previous setup on the breakout, you can see that when price traded above the recent highs, it tends to hit higher and not really looking back, right? See, first example, broke out over here, headed higher, then there was another breakout here, followed by retrace, another breakout, retrace, breakout, retrace, breakout. So when you have a trend that's really going so well, right, it doesn't really matter what setups you use to enter the trade, because when you have the trend, the tide, chances are you push you into the right direction, and you probably be usually, I would say, I wouldn't really call it easy money, but usually the odds of it having a favorable outcome is to your advantage. So that's for the euro dollar. The last pair that I would like to analyze, right, not really a pair but a product, is none other than soybeans. Because soybeans, again, commodities has actually slumped pretty badly in recent months, right, due to the strengthening of the dollar. So you can see that price on a soybean took off this key support level over here and just bashed through down in recent times. So where would I look to get short? So looking at the daily chart, right, again, a downward momentum, right? No reason to be bullish at all, right? Absolutely no reason. You have higher lows, higher highs. I don't see why you want to be bullish on a chart like this. So looking at the forward again, I'll plot the moving average, the 20, as well as the 50. So again, this zone here, this zone here will be areas where I'm interested to get short, right? I tend to call it the value zone. So should price retrace back into this area over here, I'll be looking to get short. Or similarly, you could also trade a breakdown or breakout on this product here, highlighted here, here, and here as well. So again, when you have a trend going in your favor, it's like very strong trend, strong momentum, right? The entry to me is pretty insignificant. You can trade breakout, retracement, etc. So that's all I have for you guys this week. I hope you guys find it useful. And with that, I wish you guys good luck and good trading. Thank you.